Hi folks, this is Sean Hyman, and I wanted to talk to you today about how to use the majors, which are dollar pairs, to determine what will happen in cross pairs, which are pairs that do not involve the dollar. And today I want to show you two major charts, New Zealand dollar on the daily chart and the Australian dollar on the daily chart. And you'll notice that both of these currencies tend to trade similarly. Here we had an uptrend and then a sideways range and then a breakdown on New Zealand dollar, and then on the Aussie dollars, same thing. Uptrend, sideways range, and then breakdown. So these two, follow each other because they're both commodity currencies. They're both very stock market sensitive currencies, both sensitive to commodity moves, and so they tend to head higher and head lower together. However, there is almost always at a time where one is leading the other. And in times where there's breakouts, it's easy. Those are the easy times to see the sea changes or the trend changes, which is leading the other. And for instance, both New Zealand dollar and Australian dollar were in a range, but New Zealand dollar broke out on 3/5, so March the 5th, and then it's been broken out for 2 days to the downside. You come over to Australian dollar has broken out on 3/6, so March the 6th, and only has one candle, not even completed yet, outside of the range. And so the reason why I believe that this is a genuine breakout is because we've already got 2 days into a breakdown over here. The most important point is to see which one is leading the way, and here we see that New Zealand dollar is leading the way downward, and so it shows that New Zealand dollar has even more weakness than the Australian dollar because it broke down out of the range first, and because it's also pushed so much lower, so much faster. But the biggest thing is that it led the way down lower, and then Australia followed the next day. Okay, so what does that have to do with crosses? Well, we see how the Aussie and the New Zealand dollar are dealing directly with each other, and when we see the breakdown in the New Zealand dollar and it leading the way out of that breakout, we know that the Aussie-New Zealand pair is going to break out higher on New Zealand weakness. So remember, New Zealand is leading the way lower. In the Aussie-New Zealand pair, that means Australia will head up relative to New Zealand, even though both are falling against major currencies. The New Zealand dollar is falling faster, and so when these two are directly compared with each other, it makes them go up. So it gets you to where you realize that this breakout is coming, as New Zealand dollar was breaking out and Australian dollar had not broken out yet, is the one point. And two, it also validates the breakout to where you know it's most likely not a false breakout because you've seen the breakdown in New Zealand dollar. There's also breakdowns in other New Zealand pairs too. New Zealand yen, for instance, and Euro New Zealand all show broad-based New Zealand weakness as well. So look to pairs that follow each other fairly closely. The euro and the pound do this, the Australian dollar and the New Zealand dollar do this, etc. So there are certain currencies that tend to follow each other up and down. Look and see which one's leading the way, and you'll know which one will benefit the most, and that'll help you in trading pairs like euro pound and Australian dollar versus the New Zealand dollar. Thank you so much for watching. Bye-bye.